Hello, my name is Shannon Kelly, and I'm the moderator for this panel on BSA AML and blockchain and cryptocurrency. The point of this discussion with our four esteemed panelists, who I'll introduce in just a moment, is to go into some specific issues with regard to BSA AML issues such as know your business, know your customer, transaction monitoring, where there are specific risks introduced by blockchain or cryptocurrency, but also technology innovations that help prevent illicit finance. And I will now introduce the panelists that we have um, here to speak, give them a brief moment to introduce themselves, and um, and then we'll get talking. So first, it's Yaya Fanusie, the global head of policy at the Aleo Network Foundation, who just was presenting on the Hill and is sitting up there, and that's in the background. Then we have Yevgeny Shrago, the senior director, regulatory policy at the Conference of State Bank Supervisors, and then Tom Armstrong, the TRM Labs head of compliance advisory. And so I'll start, Yaya, take a moment to discuss your broader background, and then I'll have the others as well.
Sure. Real brief again, Yaya Fanusie, and I am a global head of policy at the Aleo Network Foundation. I should probably sort of provide context for my focus. I spent several years in the U.S. Intel community, focused on counterterrorism for the most part as an analyst. And when I left the government, I started working in the world of illicit finance research and financial asset recovery. And I started doing work investigating or looking at illicit finance related to crypto, the AML issues, and the sanctions issues related to crypto. But I actually currently focus on policy for Aleo, which is a layer one blockchain that does privacy preservation while also providing controls for risk management. So hopefully I'll be able to provide some of that perspective. Thank you.
Thank you, Yaya. And next, Yevgeny or Yev.
Hi, Yevgeny Shrago. As Shannon said, I'm the Senior Director of Regulatory Policy at Conference of State Bank Supervisors, which is sort of the industry association for the 50 state bank regulators and the regulators and territories. I'll talk more about the role of states in all of this, but I handle digital assets and BSA AML broadly for our group. And previously, I spent a few years as senior counsel to Commissioner Christy Goldsmith Romero of the CFTC, which is one of the main nexuses of digital assets with regulated financial markets right now. And so I really come at this from a financial regulator's perspective versus sort of the law enforcement perspective that some of the others in this group are coming at it with.
Thank you. Thank you. And next, Tom Armstrong.
Thanks, Shannon. Hey, everyone. It's nice to be here with you. As Shannon said, I run the compliance advisory function at TRM Labs. So I spend most of my time working with financial institutions, crypto native businesses, fintechs, and everybody in between on how do we actually build compliance programs in this space. If you're not familiar with TRM Labs, we're essentially a blockchain analytics firm. We'll talk a little bit about kind of what that is today and how it helps on the compliance use cases. But been doing it for about 3.5 years or so. Was at Goldman Sachs for 9+ years before coming to TRM Labs. I ran a bunch of their investigative teams and helped start up their first kind of digital asset compliance team as they were getting into the space. Looking forward to the discussion today.
And last, thank you, Tom. And last, I wanted to introduce Val Jaber, who is the senior advisor at the Crypto Council for Innovation, focusing on combating illicit finance. And Val, take a moment to introduce yourself as well.
Sure,
Dialing in
thank
from
you.
Australia.
Yes, so apologies if I look a little sleepy, but thank you. Really excited to be joining right now. So yes, Valerie-Leila Jaber. Before joining the Crypto Council for Innovation, I was with Coinbase for over 5 years as their global head of financial crime compliance. Before that, my career really has been focused on traditional or legacy finances that we would call it now, always focused on anti-money laundering, sanctions, evasion, as well as anti-bribery and corruption. So thanks very much, and looking forward to the discussion.
Thank you, Val. So that leads us to our first question. Talking a little bit about background in crypto. I'm going to give this question to Tom. A little bit of give us a little bit of discussion on like what is crypto? Like it can be multiple things, exchanges, wallets, etc. Give us a little background on that before we dive into what are the risks.
Yeah, sure. So it's funny. I remember the first time I came across crypto was in an investigative context, probably 2014 or so. We had some clients who were sending funds to exchanges, buying mining equipment. And the first time I read it, I thought this sounds like the craziest thing I've ever heard, and could have never kind of predicted the institutional adoption that we've had in this space. That's really driving a lot of the interest today. But the most helpful thing that I have learned in trying to just get up to speed and figure out, what is this space is, as Shannon said, is to not assume that crypto is all is one. It is not a monolithic thing. So if you think about the risk assessment process that you would do in normal compliance compliance controls, there are different products, there are different services, and they're all very different. They all carry very different risks. And the same is true of crypto. If you break apart crypto in its different pieces, you have kind of the blockchain ledger, and one blockchain is different from another. Yaya is working on some incredible projects that are more privacy focused. There are other blockchains that are completely open and transparent. Assets. USDC, Circle's stablecoin, is very different from USDT, Tether's stablecoin, and its characteristics and profile. And then the same is true of the different services and intermediaries that are in this space. So you have exchanges, you have liquidity providers, you have OTC desks, you have fintechs who do payment service providing in this space. And so as we talk about crypto, we will probably use the word crypto many times as if it is all one thing, but I think it's really helpful for folks, particularly if you're new in the space and just trying to get your head around it, is to remember that it's actually very diverse. And the risks that you see in the headlines are often very isolated to very specific parts of crypto, and there are actually some very low risk parts of the crypto ecosystem. And so I think it's just helpful grounding to say, hey, this is not all one thing. Shannon put something in the chat that I think is very helpful. The Wolfsburg Group, which is a kind of a trade association of the largest banks in the world, put out an FAQ. If you're interested in kind of reading just some grounding definitions on that, I encourage folks to take a look at it.
Thank you. Thank you, Tom. And next, I wanted to hand it over to Yevgeny to talk about what is the current state of regulation? There's coverage by the CFTC, the New York Department of Financial Services, and everyone's heard about the Genius Act and the recent rulemakings. Tell us a little bit about the current regulatory landscape.
Sure. And I love Tom's reminder to think about this as a bunch of different things, because when you talk about regulation, you don't sort of regulate digital assets. You regulate entities or transactions or specific sorts of pieces of it. And that creates a little bit of a patchwork. So probably if you step back, the first thing you have to think about is, where does the government first touch digital assets? And that's going to be with FinCEN, the Financial Crimes Enforcement Network, which put out a guidance in 2013 that for the first time sort of grapples with virtual currency and lays out how exchangers, people who exchange fiat currency for virtual currency, and issuers, the people who actually issue and redeem virtual currency tokens, are money services businesses for FinCEN purposes and have to have the BSA and AML frameworks that are required for maintaining, for being a money service business, compliance, function, transaction monitoring, record keeping, all of those things. Since then, we've seen a lot of these exchangers fail to comply with their BSA AML requirements. I think most famously Binance. If you've never read the Binance enforcement orders, they are quite the read. They are quite aware of what they're doing. They have a lot of internal messages laying it out. So then the second part of it is, how do you make sure that we're not just waiting until the horse has left the barn and we're trying to fix the problem afterwards? And the answer there is supervision. And part of the reason that I'm here is, when you ask who is supervising most of these digital asset companies for their compliance with BSA AML requirements, it's often the states. Shannon mentioned New York, which has a BIT license, Wyoming, which has the special purpose depository institution. That's where a lot of these biggest companies are, the pure players, are licensed and registered. Now you're getting more and more with Genius and with some of the ETFs, you're getting more contact with the regulated financial system, with the CFTC, the SEC, the banking regulators. But for now, the states are doing a lot of this work, and Genius is still a few years out, and the market structure legislation we're talking about is even farther out. So it could be a while still. The states are conducting exams. They're doing a good job. They're thinking about it, but states don't always have as much capacity as some of the federal regulators do. And there also have to be risk-based. There are a lot of money transmitters. They're not all crypto companies, and a lot of the regular money transmitters need a lot of focus too. So there's a wide range of outcomes right now in terms of that supervision.
Thank you. Thank you, Yevgeny. Next, I want to hand over to Yaya and then Val to answer kind of two sides of a question. For example, what features of blockchain and cryptocurrency introduce greater risks of illicit finance? And alternatively, what are some of the aspects of this new technology that make it easier to mitigate risks? And I'll start with Yaya.
Thank you. I mean, I think I'd approach the answer with saying that, it's you can answer both questions with one explanation, right? Which is crypto is blockchain technology. It is software. It's open source global software. Because it's software, it is also programmable and anyone can access it. It's permissionless. So you have this new technology, which is software based, which means there's no inherent border. There's nothing that says this transaction can't go necessarily to this natively, they can go to this geographic location. So it's software that anyone can access. And most of the blockchains that we're talking about nowadays are programmable. So that means that there's a lot of interesting things you can do. You can set up different types of contracts and services, different types of functionality that can happen. Probably maybe the biggest thing I know about, maybe you'll probably touch on this, is their identity on chain. And this is software that's built that does not have intrinsically an identity built into the software, into the wallets, where it's that person's, that identity or PII. People use the term pseudonymous. You can see the transactions, right? And I'm sure we'll talk about that. But those are some of the key things because it's always accessible 24/7, programmable, efficiently and fast moving. That an illicit actor could exploit. Val, I don't know if you want to share.
The only other thing I would add is that it's immutable. So the transactions are visible. You can see the transactions. We'll definitely get more into this aspect of it, but that's really critical. Being able to see not only transactional history, but also the following the transactions all the way through multi-hops from a particular event. So, I think this is really an important aspect to consider when we're thinking about crypto, the risk, but also the incredible opportunity is that you actually can follow the transactions in a way that you never can in traditional finance. Think about when you send a wire transfer, it's really point A to point B, and that's what you see. In crypto, it is visible on the blockchain, either before, you can even see what happened before, and you see what happens after. So that's really a critical element.
Oh, sorry, Shannon, you're on mute. Maybe just while you come off on mute, one thing I loved that Val said, Shannon, is if you think about just kind of the arc of where we're trying to get to from a compliance perspective, which is away from technical compliance and more towards effectiveness, right? That's been pushed from FATF to regulatory expectations, and even in some of the language of the Genius Act mentions effective controls multiple times in the text. And what Val is saying is it's actually really powerful for compliance teams. So if you take something like a source of wealth analysis, right? Compliance teams have this obligation to be able to say, hey, when a new customer comes in the door, we have to be comfortable with the source of funds and the source of wealth. Well, I worked many cases over the years where we had to take representation letters from attorneys, accountants. You had to basically take someone's word for it unless you could find something in the public domain to kind of verify that. And in some cases you could. And in some cases you couldn't. You had to take that representation. Well, one of the things that banks and exchanges like Coinbase do today is you can get a narrative, you can collect a narrative from a potential customer, a high net worth individual, and say, how long have you been trading? What have you been trading? What services do you use? And kind of collect a narrative that then you can go verify, do we see that on chain? And if we don't, if we see a completely different narrative, well, that's a great, risk relevant data point to say, well, maybe we're not comfortable here, or maybe everything lines up with what you see on the blockchain. And so that ability to kind of see multiple hops, to kind of use the transparency of the blockchain in that very specific context of, hey, there's a compliance obligation here is really powerful and really helps us get more towards that idea of effectiveness.
And Tom, thank you, because that leads into my next sub question is, where do blockchain analytics play a role here? And you were describing some of that. I'd open up that to any of the speakers. What strength does blockchain analytics bring to providing transparency and to helping different crypto blockchains or cryptocurrency exchanges stay compliant with BSA AML rules and prevent illicit finance? And where can law enforcement and regulators use this? And I think you've already described some of that, but I'd like to open it up to everyone to say, give me some more specific examples of blockchain analytics and say their use in transaction monitoring.
I'm happy to kick that off. For me, especially coming from traditional finance into crypto, one of the biggest differences to me was the transaction monitoring, because it was a whole different level of transparency. We've been talking about the fact that you can trace a transaction on chain. That is really what I would say, a superpower for compliance officers at crypto exchanges. But what does that mean from a practical sense? Part of what you're looking for is the risk indicators about, well, where is the transaction going? What's the risk of a particular wallet address? And that's where blockchain analytics is critical in providing attribution to addresses to determine whether or not is it a risky address? Is my customer sending funds to what I believe is a risky address? So from an AML officer's perspective, if I have information about the risk of a particular address, I add that into my own risk rating within my transaction monitoring system. So that really gives me that more focused look at, okay, I'm going to actually look more narrowly at the higher risk addresses, maybe different monetary thresholds for higher risk addresses. I want to see more. I want to open the aperture, if you will, of any activity related to a high risk address. And that really does help with not only transaction monitoring, but necessarily once you have that, also with your KYC and your investigative work.
Yeah,
So-
maybe. Oh, please, yes.
No,
Please.
go ahead. Go ahead.
I was going to say, and Yev mentioned earlier the kind of prominent role of state regulators. What I find so interesting about this data is, it's not just for compliance teams. It's not just for law enforcement. We see tax authorities and state regulators use this data to be, as Val was saying, a little bit more targeted. So if you think about how kind of examinations typically go, regulator comes in, they ask for your policies and procedures, and then they maybe do some sampling, show us some cases, show us some alerts, did you follow process? Well, some of the things that particularly state regulators are doing now is using the blockchain analytics tools and data and saying, hey, on this date, I saw these 12 transactions. Did you flag them? What data did you have? Did you follow procedure? Anyway, and so it's what we kind of refer to the term as real-time supervision. It's a way for the supervisors to use the data to say, is there a more targeted way to really focus on the bad actors in the space and really be much more pinpointed than kind of wide-ranging exercises that are very process-focused, but could also be much more focused on the actual risks using some of this data. So yeah, but please, Yev, jump in.
Yeah, no, that's perfect, because one thing I'd say is this is super valuable to state regulators, and the ones that are doing sort of like pure play crypto, like especially New York, have laid out blockchain analytics and all of the things Val laid out as an expectation. It's not like, hey, this is good to have. This is we expect you to be doing this. And again, states have limited, even DFS, which has like 700 examiners and the whole team, there's just limited capacity. And the ability to zero in on things and to ask these questions is super helpful to states that are trying to do more than they really can do with the resources they have. The one thing I will note that we do hear this from members is that you got to actually understand what you're doing. I think the blockchain analytics is great, and we have an expert panel here today. Not every AML officer in every operation is necessarily going to be that trained on it. And we're working hard to train state regulators. I think TRM probably is helping us with that, or could be. We're working hard to train state regulators to understand blockchain analytics. But when they come in, they want to find this, not just, oh, hey, we run blockchain analytics, we have this. Like, are you understanding it? Are you processing it? Are you doing the things that you should be doing sort of in regular AML operations with these blockchain analytics, as opposed to just like, oh, well, we had a risk flag, guess it's an issue.
I have a question from the chat, a great question from Nayland Pereira. In wallet-to-wallet transactions, how do we ascertain the wallet risk, KYC, and the transactional risk?
Yeah, I'll take a
Do you want
stab
to
and
talk a
then
little
yeah,
bit yeah, I was going to say, do you want to talk a little bit about attribution? Because this probably
yeah.
sounds like that's the core of the question.
Yeah, totally. So yeah, Val used the term attribution. That's the key word here. The way that we do attribution in blockchain analytics is you start by having just the amount of raw transactional data that's out there. So every transaction on Bitcoin, every transaction on Ethereum, whatever the blockchain may be, right? That's the starting place. You need to make sure that you have complete and accurate data. And then you start to look for what we call kind of ground truth. So instances where we have really high certainty that an address is controlled by an entity or, in the sanctions context, a person. So that could come from a variety of places. That could be OFAC says in the SDN designation, hey, this address is owned by this entity. That gives us a really good starting place. There's other places as well. Sometimes when DeFi protocols are hacked, they may say, hey, this is our wallet address. Funds just moved from here to here. Well, now we know one of their wallet addresses. There's also threat intelligence collection. So you have people who are in protected Telegram channels or whatever it may be to try to get a CSAM vendor to unveil where to send donations. So once you have that kind of base foundation of we know this address is controlled by this actor, and sometimes those actors are totally legitimate. Coinbase, Gemini, name your payment service provider. Once you have that, then you can kind of do a variety of what we call heuristics. Some people call it clustering. It's basically different ways to say, hey, if we know this one address is controlled by this entity, we can make really good assumptions about other addresses that it also likely controls. So that's kind of just like the base foundation. Once you have that attribution and all of the other data in the address in terms of its transactional count and its inflows and outflows and all that kind of stuff, then you can start to use that data to do the classic kind of investigative and analysis that that compliance teams are used to doing.
Thank you. And value it. Did you have something else to add?
Yeah, no, I think that really nothing more to add from Tom.
Okay,
He's the expert in this area. I think that, the fact, going back to what is so different with crypto when it comes to the transaction monitoring, is that given the insights, the heuristics that Tom just spoke about, you start seeing, transactions with other parties. You get a fuller picture of your customer's transactional activity by virtue of the blockchain analytics, capabilities that you have.
Thank you. And we only have a few minutes left, but I have one last another great question, a forward-looking question. How does the protocol plan to handle already exposed public keys in a post-quantum scenario, given that the historical keys are permanently visible on chain? So so it's in the chat. How does the protocol plan to handle already expose public keys in a post-quantum scenario, given that the historical keys are permanently visible on chain? So first of all, is that true? Where are the keys visible? Where are they not? And can quantum basically, are there concerns about quantum cracking
So I'm not an expert
blockchains?
quantum or post-quantum, but I'll use the opportunity to maybe pivot a little because maybe the question is pointing in a direction that I think we should talk about, which is vulnerabilities which come from the transparency of the blockchain and the fact that, as
Yes.
we've just been discussing, everything is public. You can analyze, you can do heuristics, all of that. And one of the things that in the early years of crypto, the way that was dealt with, that's really a privacy issue if we look at it one way, because people could cluster and identify and do attribution. So people came up with ways to hide their presence or the provenance of their wallet, their history, through lots of things like mixers and tumblers. And over that obviously that brought issues because we have high liquidity and hidden identity or anonymity. It gets exploited by illicit actors. So that's really that's how people have dealt with privacy. But I think what's happening in the industry now that folks will notice, and Elio, we're really focused on this, is the idea of the need for privacy preservation, especially as more activity does come on chain and as more institutions get involved with providing these assets to their customers. There will be the need to have privacy solutions to mitigate that risk, because that could be an off-chain risk. If someone just analyzes your transactions and then they do something in real life. So there are ways now with lots of things. We don't have time to get into like zero knowledge proofs, but I'll just put that out there where you can minimize the amount of data that you have on chain, and you can make things hidden while enabling those transactions to occur. And that's again maybe for another topic. But privacy preservation is really a critical part of crypto, and that area is evolving.
I
Thank
do
you.
just I just want to stop my foot on the do something in real life. Like I think we see a lot of wrench attacks now of someone saying, "Oh, well, I can put together that you have all this Bitcoin. Now I'm going to go to your house and threaten you until you turn that money over." And it's immutable, so that can never be reversed. And then it's put through a mixer, and those folks are gone, and they're being, there's muscle, and then there's someone in Ukraine or North Korea who's taken all of that money. So I want to like really expose that to this group.
Thank you. Thank you. I think we're at time and a lot of great comments from the speakers. I want to thank the speakers. This has been a great session, a lot of great comments in the chat from the audience as well. And as you can see, this a lot of the discussion about the potential for just transparency and analytics, this leads itself to much broader uses of advanced analytics such as machine learning and AI in the future, which would be a whole other topic of conversation as well. But thank you. There's a lot to address here, and we just had a very short period of time. I wanted to say thank you, everyone. Yevgeny, Tom, Val, Yaya, thank you so much for your time. This has been a great
Thank you.
session.
Thank you for having
Thanks,
us.
Shannon.
Very
Thanks,
much.
everyone.
Thank you.
Okay. Take
Have a
care,
great
everyone. Bye-bye.
Bye.
Bye-bye.